Hello, this is Manesh Patel from ichimokutrade.com. Today is October 19th. We got another trade review. Today we're going to show you how to take a option trade that was a losing trade and how it became profitable and so forth, and show you exactly what we're going to do with this trade now. So this is a trade dealing with options. Okay. Before we begin, let's go for a normal disclaimer to state this is for education use only. We're not soliciting to you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital. It cannot be copied or distributed without our written permission. All the charts you're going to see are basically Thinkorswim, TradeStation, or eSignal, because we are broker neutral. Since we're dealing with options, we're going to deal with it on Thinkorswim. Here's our contact details here, so if you have any questions, you could basically call us or email us here. So let's go ahead and go straight to the trade. This is a trade with GE. And what we did was around 4/26, 2015, the beginning of this year. Well, not even beginning, towards the almost close to the beginning of the year. We saw this basically where we had this consolidation pattern due to earnings. This popped up here, came back down here, and then kind of settled down here, and then we saw MTF level right here, and then we basically saw an opportunity to go in long here. So around 426/427, we'll show you the orders in just a moment, is basically where we went in due to volatility being its average and low. We went in and bought some positions in this one here. So you could see this is what the daily time frame looked like at that point, and you could see the weekly time frame here. And let me go to the weekly here. So you could see the weekly here. Now, the reason why we didn't go in, we were very cautious with this trade right here, is because when this popped up here, it looked like it broke a resistance, but then it came back down here. So the key thing was in this trade here is that we wanted to make sure we enter this, and it was like what we call throwing out a bait. So what we wanted to do was make sure that we had time on our side. So just in case if this level didn't hold here and decides to go back to this bottom of the consolidation pattern here, it still had enough time to come back to the top again, where we could pretty much get back to break even or even start becoming profitable. And that's exactly what happened now. As you could see here, it came back to this bottom of the consolidation pattern here, and then came back up here to this top of the consolidation pattern months later, and that's kind of where we're at with that position. So let's go look at this now. Here is basically the position we had on. This was 4 contracts, the GE January 1630 calls, and that was the top of the consolidation pattern. And let me show you the view of the trade here. So you could see that we had bought it for 38 cents here, and we had bought it 4/22, 2015. We had gone basically a couple of strikes out of the money, and we had gone way out there. January 2016 was the expiration, and that's all because of the chart pattern here and exactly what it had done. If this had broken the resistance here and this bar had followed through, at that point we wouldn't have gone that far out, but this was in danger of just going back and forth in the consolidation pattern, so we wanted to make sure. Now if you look at it today, we're basically getting very close to at the money price, which is $30 a share. If you look at the position now, out of those 4 contracts, we're up about $32 in total for the entire 4 contracts. So you look at it individually, you're up about 20 cents here. So you're getting close to about 100% profit here. Now what's interesting is basically, sorry, we have alarms going off. Now what you can do is you could notice in this entire position here we're at $152 risk. Since you're close to the actual strike price of 30, what you can do is turn this into a vertical spread. So one option we do have is that we could come out here to January, and what we could do here is look at this here, okay, and come down in here. And you could look at this here, and you could see here that we had a 30 strikes. And what you can do, one option we have, is to turn this into a vertical spread. Watch what happens when we do that. So I'm going to change the single here. We had 3 positions here. Oops. Sorry, 4 contracts. So what I'm going to do is I'm going to click on Analyze Trade here. Okay, now it should pop up here and right here. Now notice one thing, and let's go back to our original position. If we look at our original position here, thinkorswim's a little slow right now. It's not even showing that risk graph. Okay, this is our single right there that basically we're in the position right now. Notice if you look at it here, it should be showing up anytime now. We're just waiting for this to show up. Okay. There we go. Now it showed up. Notice the $157 risk. What we do is if we will sell a call here, one strike above the original one, which is at 30 here, we're going to collect that premium of $27 for each contract. And by doing that, what's happening is we're reducing our risk. It went down from $157, got down to 44, and what's happening now is we have a max profit here of $356. So notice this is risking $44 to make basically about $356. So this is a great little trade here that where you could sit there and turn this into a vertical spread, reduce your risk and turn this into a vertical spread and still have that huge upside to the top side. So that all depends on the user if you want to do that. Good thing is you have 4 contracts here, so you could do half of them that way and the other half you could let ride, whichever options you want to do. So there's numerous things you could do. So if I sit there and did only 2 of these contracts here and did it that way, basically it turns a little awkward position here, but I reduced my risk here from about $157 down to about $98, and now what happens is I have a potential of making $517 up here. So I reduced it down in half if I do 2 of these vertical positions here. So out of the 4 I turn 2 of them into vertical and keep the rest of them there, and that's kind of what it looks like here. So there's numerous things you can do, but basically I wanted to show you this chart here is that we saw basically an opportunity here. We noticed that on the higher time frames we're still in the consolidation pattern. So what we did was we bought ourselves enough time so that if it did go the other way on us, basically we know that it would come down here to this consolidation pattern and then have a high probability to come up here, and at that point we had time on our side for price to come back up. If it went below it, we lost a little. It was not much since it was basically we got in very cheap anyways due to volatility and the cost of the option since we went way out of the money. But this was a losing trade where initially it looked like it didn't have anything left in that option value, and then all of a sudden it came back. And the reason why is if you think about it, we're in the weekly time frame, we're just playing this big consolidation pattern back and forth, and what happened was is that we still had 2, 3, 4 about 4 earnings that we could capture, 3 earnings that we could still capture, so that if we did go down negative, it still had a chance to come back up. These are some of the things that we teach you in the options class. So if you guys are interested, feel free to contact us here for any questions you may have, or to enroll in the options class to get more details of how to do option strategies safely and accurately, just like we did.